I think it's incredibly useful for as many states as possible in Nigeria to have investors events like this. I work for Nigerian Investment Promotion Commission, whose responsibility is to encourage, to promote, and to coordinate investments in Nigeria. But in reality, the investments don't come to Nigeria. The investments go into states. So the more conscious states are of the need to proactively engage investors, the more conscious they are of the battle, for competition for investment capital, and the more receptive they are to engaging investors and to getting feedback from them, I think the more successful Nigeria will be in attracting the kind of investments that we want.
Given the macroeconomic conditions that Nigeria has to deal with, especially over the last 2 years, has had to come out of a recession on the road to recovery, how easy is your job really, selling investment potentialities?
It's a very difficult job. It's a very difficult job because the first thing that investors look at are the macroeconomic conditions. The reality, though, is irrespective of the macroeconomic conditions, investors look at the potential benefits of making investments. They make investments not because of the reality of today, but the prospects that they see over the long term. And I feel very strongly that Nigeria's long-term prospects for economic development, for economic diversification, and for returns to investors are, resoundingly positive.
Now, despite all of this, you have still been able to get the pipeline investment project to get on. Can you give us some details about this project?
We have a newsletter that goes out 6 days a week. It tracks investment announcements in Nigeria or any investment-related news in Nigeria, and it goes out 6 days a week. From the newsletter, we get a sense of the possible projects that will be coming into Nigeria, and we started doing this in January last year. From January to December 2017, the newsletter announcements that we saw suggested that $66.36 billion worth of investments were announced in Nigeria. These are investment announcements, not actual investments. They still need to be converted from announcement to investment. But we saw $66.36 billion in 112 projects across 27 states and the FCT.
So this ultimately enables you to keep a track of of investors who are interested. So
exactly.
To what extent is your organization able to influence, or is it fast tracking, or to see through to the actualization of translating such interests into actual investments across states in Nigeria?
So the correct terminology for the support that we provide is facilitation. But you cannot facilitate if you don't know what to facilitate. So the first step really was in tracking the investment announcement. And as I mentioned, we only just started doing that last year. The next step in the process for us is to work with the state investment promotion agencies, is to work with investors that made the announcements, is to work with the relevant government agency or diplomatic outpost that is relevant to try to translate those announcements into actual investments. In our investment announcements, we have a breakdown by sector. So we know that the largest sector that attracted investments is oil and gas. We track by country of origin of the investor. So we know that the bulk of the announcements that were made actually relate to investments being made by Nigerians in Nigeria. We also track by state or destination state. So we know the states that the investments are going into.
So from your end, you're able to keep tabs on investors' interests, and you're able to advise states on how to attract this investment. Indeed. Now let's flip the table. To what extent would you say the states have been open to coming to your organization to access the help that the organization is so poised to give to them, to hold on to this investment?
I don't know how well it worked in the past, but I know in particular that beginning from 2018 that we've worked very, very closely with the states. So we've always worked with state investment promotion agencies. But we started 2018, about the 16th of January or so, with an event that we invited all the state investment promotion agencies to. Obviously, we could only invite them to an event in January because we had been courting our relationships with them for some time. An important fulcrum in NIPC's achievement of the mandate is supporting states to be more effective at investment promotion. So we have a WhatsApp group, actually, of state investment promotion agency heads, commissioners of commerce, and people who work in similar functions across the states. We have an email group of people who work, in similar functions across the states. And on those platforms, we share information, we share presentations, we share insights to make sure that we're all working in the same direction. I find that many states have been very proactive about promoting investments. The more interested the leadership of a state is, because the governor of the state is the #1 investment promoter. The more proactive the governor is, the more receptive I find that people who work with the governors are in jumping to what's required for them to do. But many states have been excellent at it.
Are you at this point able to shed some light to us on the NIPC's investment certification program and how exactly that works?
The NIPC investment certification program for states was an initiative that we started last year. We hope to have a formal launch when we award certificates to the first 3 states that have been certified. But essentially, the object of the certification program is for us to train states as part of our efforts at developing their capacity for investment promotion. So we train them on 3 standards. The first one is an information standard, which speaks to the quality and availability of the kind of information at state level that investors will require to make sure states understand what investors need and almost have that information on tap, because investors will always ask for it. The second standard is a property standard, which looks at the kind of property assets that the state has. Land, buildings, facilities, proximity to utilities and the like. And then the process, the speed and the cost of transferring those assets from the hands of the current owners to the hands of investors. Because investors, generally need real estate, to function. And then the third standard is an information standard, which speaks to how the state puts all of this information together in a readily, easily accessible format for the states. So the object is to certify states across Nigeria.